Good morning, everybody. It's Chris from Serene Education with the 4 major Zinos update for the 3rd of December 2013. Okay, let's have a look and see what happened yesterday and what could be in store for us today as we head into the all-important first week of a new month with non-farm payroll coming out this Friday, guys. So let's have a look. So we've had a lot of indecision. Price on Euro US dollar here, first chart we're looking at. You can see that we had a little resistance level here prior in the early part of November, and we broke above it, but not really carrying a lot of sentiment with it. I mean, great, it was trading above the 23.6 February weekly here, which was important. There we go, you can quite clearly see it. Prior resistance here in November, and then we had the upside price still favoring to move higher, and all indicators very much telling us to do so. We had this bullish breakout after a shooting star like exhaustion candle at the underside of 23.6, and that was the only type of candle that was actually going to cancel this negative sentiment candle. Once we got above it, we had this little support candle here, almost a spinning top. However, Sunday night evening, trading open, very indecisive, and then yesterday on the market we saw Euro falling backwards, even though some of the PMI results came out favorably. Quite interesting. So now back below the 23.6 on the weekly, and as long as we have resistance here, there's more likely for that uncertainty to start moving in. This bearish engulfing candle we saw yesterday has now cancelled out all of the movement that's price actually gained through the bits of Thursday. That's Friday, Thursday, Wednesday, Tuesday, and then Monday. So we had almost all of last week's work being undone by yesterday's candle. The indicators are still looking to the upside. They're still looking higher. In fact, we still have a swing high. And if you draw a quick trend here, you can see that the noticeable pullback that we had here at the mid-November range, you can see that price yesterday is now actually trading in that range, that level. So still below the 23.6, however, and if we have resistance here, then intraday we could see a bit of mixed signals. Today we don't have any news. We only have the Spanish unemployment change figures at 8 a.m. GMT this morning, which is coming up in the next couple of minutes or so. So they're expecting a almost half of the previous figure. So that's going to be quite interesting. They could get a knee-jerk reaction from that announcement. So bearish engulfing candle over the past couple of days. As long as we trade below this, we're going to see further indecision. It's trading between below us. We have the monthly fib as well, and you can see within this range of here a lot of consolidation. We want to be trading higher or lower than that to get away from all this consolidative that we've seen over the past couple of months in this particular squeeze pattern. So between the 23.6 weekly and the 38.2 weekly, we have the monthly fib, and you can see how price has been very, very consolidative while we've been trading within that. So non-farm payroll this week coming up. We have a lot of news coming out for both Wednesday, Thursday in particular with interest rates announcements, and then Friday, the last non-farm payroll, well, the last Thursday prior to non-farm payroll, we had that negative interest rates announcement from Euro, and they dropped the interest rates quite unexpectedly. So a lot of ranging here. So you can see the candlesticks over here. They're still primarily more blue, but you can see there's some negativity coming through on some of the time frames. So bearish engulfing, prices trading indecisively this morning on the Asian session, and then as we go into the European session open now, we'd like to see for price to be very, very positive. We have to get back above that 23.6. The longer we trade between or below the 23.6 and above the monthly, then we're likely to see more consolidation. Sterling here, you can quite clearly see moving higher. In fact, this dotted line over here represented a price support and resistance level high for this particular pair, and those was the December 2012 highs that we just saw. And I can take away this fib now because price is trading well above it. And if I go back to where price is trading now, you can see that yesterday's candle very indecisive, but you can see that price trading into that monthly fib here at the 1641.70 change. That's the monthly fib here. So moving higher over the past couple of months into that level, and I expect once we got into that level, a lot of contracts were sold, and hence we had the pullback yesterday. Still consolidative, still trading within the range. This is an exhaustion candle, a negative candle at a major support and resistance level, but we need to see a genuine bearish engulfing candle to confirm that as true selling. If she hugs the top end over here and she trades, the only candlestick that's going to cancel this negativity candle that we saw yesterday on the daily is going to be a bullish engulfing candle. And if that bullish engulfing candle is created, it's then going to cancel out the monthly 38.2 fib level, which is a very, very strong signal in itself, because if I just pan out here, you'll notice that price will be well on its way up to the next potential high, which is at the 1672 and 24 change mark. So if it gets above the monthly and we do get that bullish engulfing candle, fantastic, because then it's going to tell us that we're still looking for higher highs. The indicator box over here is very much telling we should be looking for further highs. In fact, we have blue arrow, blue candles. All the moving averages are below price and order. RMO as well, above, has been for a number of months. And so is the OSMO. RSI is there. It's complementing prices. She moves higher. She is consolidative. And yesterday's indecisive candle or exhaustion candle at resistance has put some brakes on, because we're now at a major support and resistance level. And as I mentioned, the only sentiment candle that's going to actually cancel this negative candle here that we saw yesterday is a bullish engulfing candle. So you can either say to yourself, well, what I can do is give this candle back to the market today and to get my decision candle, whether it be bullish, which will tell you then to still look for longs, or if it's bearish, and then we should start looking for potential pullbacks. And if we do pull back, we'll likely go back to the prior support and resistance level breakouts that we saw just recently. And you're looking from where price is trading right now to that level, you're looking in excess of 150 odd pips. So got to have a decisive candle. This is an indecision candle. It is an exhaustion candle on its own, but even more importantly, when it's occurring at a major support and resistance level, as it's quite clearly doing here, the monthly fib, then it's more pronounced. So it's more of a pronounced exhaustion candle, because anybody buying here on the breakout, that would have been their target. They're now at their target. Those contracts have now been taken away. They've taken them off the table. That's now led into shorting contracts being taken up, but we do need to see the follow through. If this is a genuine selling, then we need to see a daily bearish engulfing candle. The upside would be a bullish engulfing candle which cancel this negativity, and then we should be looking high. US dollar Swiss franc here, consolidative over the past week or so. I did mention yesterday we've had all of last week, in fact, 1, 2, 3, 4, 5, almost a full week of consolidation at the daily 50% retracement level here. We are trading below the weekly fib, and she is still making swing lows. And you can see that there's more negativity bar the 4-hour candle here, where we're seeing a lot more positives coming through. But you can see quite clearly the longer she starts to consolidate without making any new lows, we start to see more potential buying contracts being taken. And hence we've seen a bullish engulfing day yesterday after a lot of indecision or support at the 50%. But she's now not able to break the 38.2 level, which is clearly where she traded between. We have a spinning top, not a very great candle, but you can see the RMO is still very much below the zero level. OSMO is below, but dark red, because we've seen a lot of consolidation. RSI is still trading below the 50% level. So here there's still negativity. However, if we don't see a new swing low, then there's more likely to be a swing high that's going to follow suit. We are going to non-farm payroll. US dollar news out at the end of the week. Is that going to reflect here on the Swiss franc? That remains to be seen. But as long as if we don't see another new low soon, then there's more likely to be a new swing high. So just got to be well patient here. If we drop down to our 4-hour time frame, if I just make this chart a bit bigger, you can see a lot of consolidation in and around this area here. And you can see that the 200 period, or the institution moving average, now is in play with all the moving averages, which is not a clear sign of trend, because if they're all consolidative, moving averages are very trend orientated, and if they're not moving in a strong trend, you can see they all start to bunch up, and therefore you don't get a lot of decisions. So here, if you're going to look to trade this, ideally we want to be trading above the current high that it made over the past 20 hours, which will be above the 38.2. You can see the RMO still needs to get above that all-important zero level. RSI has gone above it over the last 20 hours or so. OSMO has beaten us to that, but we want to clear close, and we do need to see our candlesticks, i.e. red arrow, blue candle, and then RMO to move above, and then we can start looking to target back towards the next fib level highs, which is a good 48 pips in change, and the next one above that we're looking in excess of 130 pips as well. So take that on board, guys. Last pair of the day, US dollar Japanese yen on the daily, looking very, very good. After the breakout, that squeeze out breakout I mentioned, we needed to get above the price support and resistance level swing low, which we did here, pull back, and they had a nice hammer, and then we saw the building. And since then, we've seen nothing but new swing highs literally every single week since then. Positiveness here, bit of negativity intraday here on our 5, 15, and 30 minute, but that's going to happen nonetheless. That's momentum as we open up on the European session. Should start seeing move highs, but you can see as we're heading higher into the weekly highs, which are our April highs here, which are roughly around the 103.71 and change mark, you're going to start seeing more profit being taken. You can see the Osmo indicator here is not making new histogram highs. The RMO is, but we're well overbought now on our RSI. So we could see, it's not telling us listening it's going to change now to start selling, but it's just telling you to see it's well overbought. We are heading into a weekly fib level highs. So we could start seeing consolidation. And all importantly, we have non-farm payroll this week. Are the non-farm payroll figures actually going to be a bit of a surprise? Are they going to be working for US dollar? Or are they going to be working against US dollar? That needs to remain to be seen. But we are heading into a weekly fib, so we're just going to be very vigilant if you are looking to take any further trades to the upside. If you are more risk averse, then you might be aggressive and take it to this level here, but there's not really much on the table here. 69 pips there is there, but you're taking on board a lot of risk for a very, very small profit. The other scenario would be wait for a nice bullish engulfing break above the weekly, then target towards your monthly fib, which is in excess of 180 odd pips to that level. So that's it, guys. Short and sweet today, to the point. Please, if you are using any of our Serene Education templates, please back it up with sound money management, and most importantly, follow the rules that apply to this template. Okay, very, very important. That goes for anybody out there who's trading your own strategy. Always follow the rules. You have set rules, you need to follow them very, very to the point, and then you need to also back it up with sound money management rules. I'm going to leave you with that. Hope you have a fantastic trading day today, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.